In all my years of covering economics, precious metals, and the New World Order, I've never seen such epic events unfolding at such a rapid pace. Let's document the collapse for the week ending Friday, May 16th. On Sunday, British Prime Minister David Cameron told Sky News taxes will have to rise unless officials are given new powers to raid people's bank accounts. What's good for Cyprus is apparently good for the citizens of the UK. Cameron's statement is shocking to those untrained in the ways of the New World Order, but to us, it's clear that the bloodlines of the ruling oligarchy from centuries ago remain the bloodlines in power today. Cameron's fifth great-grandfather was none other than King William IV. Much of the ruling class has merely shed crowns for Armani suits. And speaking of the ruling oligarchy, we shared this unbelievable hypocritical conflict of interest earlier in the week. U.S. Vice President Joe Biden's son, Hunter, will sit on the board of Ukraine's largest gas company. But then we learned it's even worse. Also on the board will be a close family friend of U.S. Secretary of State John Kerry, according to the Wall Street Journal. When pressed on this issue by reporters, the State Department responded, quote, "Russia has oligarchs, the U.S. has private citizens. We'd like to note that these, quote, private citizens have the backing of Blackwater-style mercenaries, NATO, and the international banking mafia." On to inflation news. What's been hiding in clever packaging of smaller portions for slightly more cost and the government's fraudulent hedonics calculations can hide no more. Our friend Michael Snyder notes the price of shrimp has soared 61%, and the price of beef has hit an all-time high caused by the endless drought in the West, which has caused the size of the U.S. cattle herd to shrink to a 63-year low. The price of chicken breast is also up 12.4% over just the past year, and with the wages of the middle class and lower classes stagnating or decreasing for those who even have jobs, the devastating pinch of inflation is beginning to be felt. And what's really frightening is that 100% of California is now in the highest stages of drought, with 49 million Americans already struggling daily with food insecurity. The situation appears to be heading from bad to worse. For those with the expendable income with which to buy physical precious metals, consider the big news of the week and maybe of the decade. It's the beginning of the end of precious metals manipulation. The London silver fix is dead, according to Zero Hedge. For those who have long maligned the very notion of precious metals manipulation, Deutsche Bank's announcement that it was selling its seat on the twice-daily London gold fix was a wake-up call, leading many to ask, is the death of the London gold fix next? Regardless, the end of the silver fix is said to be effective August 14th. According to Investment Research Dynamics regarding the LBMA announcement, quote, "I'm sure there will be some kind of absurdly puerile rationalization full of empty rhetoric and shameless propaganda for the event. It is an unthinkable acknowledgement that the London precious metals price fix is rigged." Recall that Deutsche Bank recently gave up its seat on the price fix committees of gold and silver after trying hard to find a buyer for the position. No bank wanted the seat because they all know that it comes with billions in potential liability, end quote. And most amusingly, CPM Group's Jeff Christian tried his best to spin the news, telling Kitco, quote, "There are a lot of implications, and one of the problems is that you're now moving to an even more opaque, unilateral, asymmetrical market where people will be buying and selling metal in a less informed market. And you have a lot of contracts that are based on the London fix. And all of those things now have to be renegotiated."
Well, I think that what you could do, and what people have talked about doing, but no one's actually made any moves toward it, is to develop a sort of a computerized fix.
Now, friends, that doesn't sound like the market will be allowed to determine the price of gold and silver, does it? When asked about the timing of the news, Christian said, quote, "What's happening is as the banks continue to suffer, and in the case of Deutsche Bank, get out of the market, they simply said, we don't have time to do this in a leisurely fashion." Indeed. Our question, Mr. Christian, is, what's the rush? Why such a sloppy, sudden, public, embarrassing exit? Could it be that the smoke we see is from the fires in the vaults at the LBMA? Is the metals manipulation really about to end? Perhaps. But one thing's certain, the fight to fix the prices of both gold and silver just got a hell of a lot harder. Thanks for watching, liking, and sharing this video with others. And check out SGT Report for the very latest real news and breaking information. Thanks for watching.